traders at Axis Bank say the bullish sentiment in the Treasury Bills market is driven by significant liquidity in the system as buy interest is witnessed across the curve. Now, September to December 2023 bills and the June to July 2024 maturities are the most sought after. Daniel Afolabi, Treasury Team Member at Axis Bank, joins me now for more market updates. Daniel, thank you so much for joining us on the show today. Let's talk about the market dynamics at play at this point in time, from activities from Monday up until now. We missed you on Wednesday.
Yes. Thank you, David. Thank you for having me. So, we've seen significant liquidity in the market. So, over the past 1 week, we've seen about from 780 billion as market liquidity up to until about 880 billion yesterday. However, yesterday we saw a significant decline. We just got the figures, about 500 billion was debited
from the banks, yes,
the markets yesterday. So up until now, we're seeing trades and everything, and the market movement being triggered by the high liquidity. Now that we're seeing such huge amount of debit, we expect a little bit of reaction from the market participants. Thank you.
And how long do you think the bond market will remain muted now? The lack of appetite for the current offer yields is also what's fueling that. We're also seeing the 2026 paper also being the most preferred at this point in time. What should we expect come next week as we are leveraging more into the month of August?
Okay, so I think going into the month of August, as we've seen, markets is really trying to determine what exactly the debit will be. Now we've seen a 500 billion debit as of yesterday,
yes,
which has actually reduced significantly the volume of funds in circulation, the liquidity market. So let's see by next week, depending on how much liquidity is in the market, we should see a little bit of reaction. However, in terms of policy direction as well, we're expecting some level of calm until there's certainty across what the interest rate levels will be.
Yes, and in terms of auctions and also the currency market now, how do you see things panning out in the coming days and months?
We're still seeing significant illiquidity in the FX market. Yesterday, we saw an appreciation in the NAFEX rate to about 750 levels. However, at the end of the day, when we got the INE figures, it's also depreciated again to about 770 levels. So I think largely in the FX market, what we'll see is improvement when there's liquidity, and we'll just continue to see a bit of calm and demand outweighing the supply there.
And auctions?
Yeah, well, auctions, let's see, we're expecting, you saw what happened in the last bond auction where the offer closed at. We're expecting some auctions against in coming weeks, so let's see how that plays out.